CBDCs, Gosbank 2.0 Digital Chains of Tyranny. If you're ready to uncover the hidden chains dragging our future into the abyss, hit that like, smash the share, and lock in your subscribe or follow, because truth like this demands an army of awakened minds. We're diving into Central Bank Digital Currencies, or CBDCs. These things are pitched as the future of money, all shiny and efficient, but when you peel back the layers, they're a whole different story. We're going to talk about why they're not just a tech upgrade, but a serious threat to our freedoms, our economies, and even our societies. And to really drive it home, we'll look back at the Soviet Union Central Bank, Gosbank, and how that kind of iron fist control over money wrecked everything from the inside out. It's a cautionary tale that feels way too relevant right now. Before we get into the nitty-gritty, let's just set the stage a bit. Imagine a world where every dollar you spend is watched, restricted, and maybe even programmed to expire if you don't use it fast enough. Sounds like science fiction, right? But that's the promise, or the trap, of these digital currencies controlled by central banks. They're sold as a way to make payments smoother, include more people in the financial system, and fight things like inflation or shortages. Yet, underneath that, they're a tool for total oversight where governments decide what you can buy, when, and how. And if history teaches us anything, it's that when a central authority grabs that much power over money, it doesn't end well. It leads to distorted economies, lost incentives, and a slow rot that crumbles societies. Think of it as a digital cage disguised as convenience, one that entraps masses of people, eroding their purchasing power and freedom bit by bit. Alright, now let's roll up our sleeves and unpack this. Starting with the basics. A CBDC is essentially digital cash issued directly by a central bank, like the Federal Reserve or the Bank of Russia. Unlike your bank account or even cryptocurrencies, it's programmable. That means the folks in charge can code in rules. Maybe your money expires after a certain date to force you to spend it, or it's colored so you can only use it for approved things like groceries but not gas if there's a shortage. Or, based on your behavior, they could limit what you buy altogether. In Nigeria, when they rolled out the eNaira, it caused absolute chaos. People couldn't access their cash because of withdrawal limits and forced digitization. Over half the population was left with worthless paper money, leading to riots, poverty spikes, and businesses grinding to a halt. Shelves were full, but no one could buy because the digital system throttled demand. It's like creating shortages on purpose, even when goods are there. Now, compare that to Gosbank in the Soviet Union. Established in 1921 under Bolshevik rule, Gosbank was the ultimate central planner's dream. It wasn't just a bank. It was the heart of the command economy, controlling all credit, investments, and the ruble supply. Under Gosplan, the State Planning Committee, it translated party directives into economic reality, or what passed for it. Every financial flow was directed from the top down, prioritizing heavy industry over consumer needs, leading to massive misallocations. Mines would fake or production numbers to meet quotas, then trains would haul imaginary cargo, smelters would pretend to process it, and factories would claim to build from nothing. This fraud snowballed, wasting resources on a colossal scale. Gosbank fueled it all by printing rubles to cover deficits, creating hidden inflation that showed up as endless queues and empty stores. People had money, but nothing to buy. Sound familiar to those CBDC shortages with full shelves? The flaws were baked in. Without market signals like real prices or competition, incentives vanished. Why innovate or work harder when rewards were egalitarian and fixed? Labor productivity tanked, and the economy stagnated. By the 1980s, under Gorbachev, the cracks were canyons. Deficits ballooned, shortages worsened, and the whole system collapsed in 1991, splintering the union into chaos, ethnic conflicts, and economic freefall. It wasn't just policy mistakes or external shocks like oil prices. It was the core rot of central control destroying from within. Gosbank's monopoly on money meant no escape, no alternative currencies, no private credit to foster real growth. It enforced a trap where people's purchasing power was dictated, not earned, leading to parasitism, black markets, and societal decline. Fast forward to CBDCs, and you see the same mechanisms supercharged by tech. Programmable features mean central banks can throttle demand instantly, block buys of scarce items like toilet paper during a panic, or tie money to behaviors, like negative interest rates that eat your savings if you don't spend. In Russia, the digital ruble raises fears of surveillance architecture, where social payments expire or can only be spent on kid stuff for families. This colored money, just like Soviet rationing, but digital. Public distrust is huge. Only 30% want it, fearing inflation vulnerability and state vulnerability. And globally, surveys show most people reject CBDCs once they hear about the controls. Why? Because it eliminates privacy. Every transaction is tracked, no anonymity like cash. Governments could freeze accounts for dissent, like what happened to Canadian truckers, or punish undesirable spending, say on ammo or travel during high smog days. The destruction is insidious. Enforced CBDCs trap masses into a system where freedom evaporates. Your purchasing power isn't yours. It's conditional. Want to save? Negative rates erode it. Want to buy what you need? Restrictions say no. This leads to distorted economic calculation, no real prices, just central decrees, causing boom-bust cycles on steroids. Banks suffer too. Faster digital runs could collapse them, as seen with Silicon Valley analogies. And without competition from private money, innovation dies. It's Bolshevism's central planning reborn digitally, fostering dependency, shiftlessness, and degeneracy. Societies decline as incentives for hard work fade, replaced by parasitism and control. Future generations inherit not prosperity, but a surveillance state where money is a leash. Digging deeper into the themes, let's analyze how this plays out. At its core, CBDCs amplify fiat money's flaws, unchecked inflation and debt monetization. Central banks already print to fund deficits, but CBDCs make it seamless, redistributing wealth to cronies while the masses suffer. In the Soviet case, Gosbank's deficits hid inflation as shortages. CBDCs could do the same digitally, rationing via code instead of queues. This destroys freedom by turning money into a behavioral tool. Imagine linking it to social credit: spend right, get rewards, deviate, get cut off. It's authoritarianism digitized, eroding voluntary exchange for commanded compliance. Economic degeneracy follows. Misallocated resources breed inefficiency, low productivity, and collapse. The Soviet Union rotted because central control ignored human nature. People need incentives, privacy, and choice. CBDCs ignore that too, entrapping us in a trap that saps vitality, leading to societal breakdown. And the evil? It's core because it's enforced. No opt-out, like cash phasing out. In Nigeria, it sparked poverty and riots. Imagine that scaled up. For current generations, it's lost privacy and stability. For future ones, inherited chains decline into a controlled dystopia where purchasing power is a privilege, not a right. Pulling from history, let's hear some echoes. Lenin himself said in 1919, "The way to crush the bourgeoisie is to grind them between the millstones of taxation and inflation." Gosbank embodied that, grinding the economy to dust. Or take Ludwig von Mises in 1920. The interventionist policy provides thousands of opportunities for the interventionist government to improve the situation of some people at the expense of others. CBDCs are that on steroids. From the Soviet era, economist Nikolai Shmelev wrote in 1988, "We have shortages of everything except money. That's the trap, money without power." And in modern warnings, like from the Bank for International Settlement's own papers, they admit CBDCs could restrict personal freedom while doubling down on failed management. So what's the takeaway? Steer clear of this trap. Push for sound money, gold, silver, or decentralized alternatives that can't be programmed or surveilled. Demand privacy in payments, resist cashless societies, and educate others on the dangers. If we let enforced CBDCs slide in, we're repeating the Soviet folly, dooming ourselves to decline and degeneracy. Stay unchained. Stay free.